Hello and welcome to the Southwest Florida Real Estate Market Trends Update for August 2025. So I've got several slides I'm going to go over with you and talk about what's really happening in the Southwest Florida real estate market right now. This is the Ellis Team Current Market Index. Now if you remember, as the index goes up, that's not good for home sellers in the area. That means prices are probably going to come down. What we've seen recently is, prices went up through December 24, and of course prices have come down. Prices are still coming down, but now the market's starting to retreat. The CMI index is starting to retreat. That's a good thing for future pricing, but it's still kind of relatively high, so that doesn't mean prices are going to keep or start going down right away. So that's just something to keep in mind. So let's look at kind of what's going on in the market. This is our total pendings as they stand right now. Now, what do you see? Well, our trend line is down, and we are at the trend line, but we are down in August compared to August of last year, and compared to August of last year. So, I've got the official numbers here, and pending sales are down 9.6% this year versus last year. That's not good for home sellers. Let's keep going. So let's look at our supply and demand. This is our inventory of supply, and you see it's kind of quite high. And this is our demand, that's the pending sales. And it's much lower. Now, back in 2022, they were almost equal. In fact, demand outstripped supply, so prices were really going up, but we don't have that now. We've got a high degree of inventory, although it is down from the highs it was just a few months ago or several months ago. But the pending really hasn't kept up. So it's a good thing that this is coming down, and what's really happening is sellers are taking the home off the market. They don't like today's pricing. The difference between this number and this number is what we call the gap. And we like to illustrate it another way. But with the gap, you can kind of see prices were not going to be stabilizing or increasing when this gap was widening. The good news is the gap is coming down, but it's still significantly higher than we had in all of 24. And in 24, prices didn't rise either. They were still falling. So until we get that gap down, it's not really great news for home pricing. It's just the facts are what the facts are. So let's look at our weekly inventory. Now we track it here at the Ellis Team. We track single family inventory week by week. And going back to 2021, we didn't have a lot of inventory. The bottom was about February 19th of 2022. But since then, it started really going up. Now, you'll notice it is off the peaks of January, which is quite often the case. It will peak out in January each year, but it's really starting to come down. Not because the sales are tearing it up, it's because home sellers are taking the properties off the market. If we look at the condo market, it's going to look pretty much the same. The only thing that changes are the actual numbers, but they've been coming down as well. So at the end of this, I'm going to have some recommendations for you, and it may not be what you think it is. This is the official numbers going back to 2016 for inventory for Southwest Florida. As you see, it coincides with our numbers. Really down in 21, down to 20 in 22, it was at the lowest, and then it's really started going up. Even though it's coming down, look how much higher it is compared to what it was. So that doesn't mean prices are going to come roaring back. Just doesn't mean that at all. It's just we've got a new market to deal with. Let's look at sales. This is sales prices from 2023. This median price is up close to $450. We are down to about $375 at the moment. In fact, we're exactly $375. They were at $395 last year. So if we go back to July of last year, that number is $395. So we're down on the median 5.1%. Average prices are down 6.9%. We like to track the median, but that's down, like I said, 5.1%. If we look at 12-month prices, I've got both the average. The average last year was 480. This year is 482, 249. But last year it was 518, so that's what's down 6.9%, and of course the 5.1% that we just showed you. Let's see what else we've got here. Homes closed. So this is interesting. We were doing pretty well the first part of the year. The yellow is 2025, but we're starting to dip below 2019 levels, 2024 levels. These high interest rates are really finally starting to catch up. It's true, Baby Powell was too late because it's just catching up. Now, to Powell and the Fed's credit, their goal is to not have steady home sales or even steady home sale prices. They have a mission of two things: watch unemployment and keep inflation. They can't worry about how much it costs us to refinance the debt, how home sales are going. It's just that home sales are one of the largest chunks of our economy. And when they raised rates, they wanted to slow down the economy. Well, they've finally done that. America's consumers have kind of started running out of money, and it's starting to show up now. So now might be the time to start really reducing these interest rates. And I think in September, we might get that bit of good news, at least for the housing market. That's kind of what we've been wanting. Doesn't mean that's what the Fed should or shouldn't do, but as a real estate community, and we deal with sellers all the time, that's something we know we want for them because that's what they want. This going back a little bit further, if you bought back in 2020, you're still pretty good. But if you bought in 2021 or 22, prices have been coming down. And this chart here might illustrate it just a little bit better. Dollar volume, I won't go into all of that. What I will say is this: closed sales are down 2.4%. New pending sales are down 3%, and I think our graphs just showed that. Pending inventory is down 9.6%. And inventory of active listings is up 26% from last year, even though it is coming down. So I find that very interesting. Now, here's a couple things. At our market center here at our company in Fort Myers, they're pretty transparent. We have open books. They share with us everything. And here's a dichotomy. Here's something that I'm seeing on the brokerage side, but I'm not seeing in the official stat side. Our closed sales volume was up about 12% in July versus last year. Well, the market's not showing that. The dollar volume was down 9.2% in the market. So that means our brokerage is doing something that's good. The other thing is, I was looking at our closed units. They're up about 26% from last year. And the closed units are down 2.4%. So our brokerage is beating those averages. So what are we doing? Well, it's got to be either attracting more agents, better agents. It's the marketing. It's getting better at educating our sellers, our buyers. It's something is happening. But those are encouraging stats, at least at the brokerage level. Now, will it continue? We track this every month, and we're just transparent. We just tell it how it is. Sometimes we have a bad month in a certain category, but we like to take a look at that. So, where do we go from here? What's our advice to sellers? Really, we've got some advice to buyers too. But to sellers, with all that inventory that's come off the market, if I go back to our inventory, it's come off the market. What do you think is going to happen when these interest rates start coming down and once we get closer to October? Well, we think there's a lot of sellers that raised their hand before and said, hey, I'd like to sell, but the market didn't cooperate. But if they raise their hand once, there's something's going on in their life. They would like to sell it. They want to upsize, downsize, move out of the area, move somewhere else in the area, get out of a flood zone, get into a flood zone, get on the waterfront, get off the waterfront. A lot of different things that people do. Maybe they're going through a divorce. A family member passed away, and they don't need the property anymore. Could be probate, estate. Lots of things going on. But they raised their hand before. They just didn't like the prices. So they said, let's take the home off the market. Well, what do you think is going to happen once we get closer to season, get out of hurricane season, get the Fed starting to lower interest rates, maybe September, October, November, but in December? A lot of these sellers are going to raise their hands and say, going right back on the market. Well, that's going to change all of our dynamics again. And that index may start to populate again. It may not be good for home prices because you're going to be competing with 20 to 30% more home sellers. So my advice to home sellers are, if you're thinking about selling, we got some good news coming, hopefully in September, if the Fed does indeed lower rates. I would get your home on the market now and get ahead of all those other sellers. that are going to probably start to put their market on October. I'd get out of this market before then. Now, if I'm a buyer, what buyers always say is, look, I don't like today's high prices, and they've been helped out because prices have been coming down. And I don't like today's high interest rates. I don't like today's high insurance. I don't like taxes. I don't like anything. Buyers tend to find reasons not to like things until the market gets good. Then they all jump in at the same time. Well, the good news is insurance has been coming down. But as interest rates start to come down, what do you think all the other buyers are going to do? All the other buyers are going to try to jump in too and say, hey, I want in now. So now as a buyer, you're going to be competing with all the other buyers that jump in. So you've got maximum leverage with these sellers right now. You won't have that when all the other buyers jump in. Now, it doesn't mean prices are going to go up. So sellers, don't get too confident. If Brett, you're saying all these buyers are going to jump in. Yeah, but there's a bunch of sellers that are going to jump in too. So that's going to hold pricing where it is if that happens, if our theory is correct. So all I'm saying is buyers have excellent choice right now, and they've got negotiating leverage. They may not have that going forward. You lock in today's prices and the seller concessions, and when rates start to come down, you can think about refinancing, or just floating that rate for a couple weeks as rates start to come down, and then take advantage of a lower rate. But still, you may want to refinance in a year or two if these things come in. But what do you think is going to happen, buyers? Let's say rates go down 1%, 2%, 3%. I don't know what they're going to do, but let's just say they do. All prices could start to go up one day, but you won't have locked that price in. Those buyers that lock that price in now and negotiating their concessions with these sellers right now are going to maximize their leverage, and when those rates come down, they take advantage of that. So they win today and they win some point in the future. But let's say rates don't go down. Let's say they go up. Well, buyers don't ever lose because they lock in today's leverage with the sellers. They lock in today's rate. Let's say rates go to 10%. The buyer's not going to refinance. The buyer's going to stay in the sixes. So it's a no risk proposition. It's maybe a risk to the lenders because when they lend at 6.5, that money's gone. They're going to make 6.5. If the rates go down, the buyers refinance. They lose that. If rates go up, the buyers keep that, and the seller or the investor, the bank, can't raise it to 10% unless you take an adjustable rate mortgage. So right now, the buyers are in a no-lose situation with the bank. The buyer can win, the bank cannot. So if I'm going to Vegas, I like those odds. You're in a no-lose situation with sellers today, but that may change in the future. So buyers, time to get off the fence. Sellers, I would beat the rush because I think a lot of other sellers are going to come to market, and that won't be good if you're competing against all them. It'll be better if rates are better, but we have a limited number of buyers. So the sellers may still outpace the buyers until this economy gets rip-roaring again in a year or 2 or 3 or whatever that might happen. So that is our Southwest Florida real estate market trend update for the month of August 2025. Hope you've enjoyed it. Thanks for tuning in.
The Ellis Team at Keller Williams is a family affair. Always call the Ellis Team. They'll handle you with care.